Hello friends, today our topic is Enterprise Resource Planning. Enterprise Resource Planning Systems, that is ERPS, integrate or attempt to integrate all data and processes of an organization into a single unified system. A typical ERP system will use multiple components of computer software and hardware to achieve the integration. A key in ingredients of most ERP systems is the use of a single unified database to store data for the various system modules. The term ERP originally implied systems designed to plan the utilization of enterprise wide resources. Although the acronym ERP oriented or uh, uh, organized in the manufacturing environment, or it's originated, today's use of the term ERP systems has much broader scope. ERP systems typically attempt to cover all basic functions of an organization, regardless of the organization's business or charter. Business, non-profit organizations, non-governmental organizations, governments, and other large entities utilize ERP system. Additionally, it may be noted that to be considered an ERP system, a software package generally would only need to provide functionality in a single package that would normally be covered by two or more systems. Technically, a software package that provides both payroll and accounting functions, such as QuickBooks, would be considered as ERP software package. However, the term is typically reserved for larger, more broadly based applications. The introductions of an ERP system to replace two or more independent applications eliminates the need for external interfaces previously required between systems and provides additional benefits that range from standardizations and lower maintenance one system instead of two or more to easier and or greater reporting capabilities as all data is typically kept in one database. Examples of modules in an ERP which formerly would have been stand-alone applications include manufacturing, supply chain, financials, CRM, human resources, and warehouse management. Overview of ERP. Looking more closely at ERP systems, a key factor is the integrations of data from all aspects of an organization. To accomplish this, an ERP systems typically runs on a single database instance with multiple software modules providing the various business functions of an organization. Some organizations, typically those with sufficient in-house IT skills to integrate multiple software products, choose to only implement portions of an ERP system and develop an external interface to other ERP or stand-alone systems for their other applications needs. For instance, these PeopleSoft, that is HRMS, and financial systems may be perceived to be better than SAP's HRMS solution. And likewise, some may perceive SAP's manufacturing and CRM systems as better than PeopleSoft's equivalents. In this case, these organizations may justify the purchase of an ERP system but choose to purchase the PeopleSoft HRMS and financial modules from Oracle and their remaining applications from SAP. This is very common in the retail sector where even a mid-sized retailer will have a discrete point of sale, that is OPS, POS, product and financial application, then a series of specialized applications to handle business requirements such as warehouse management, stock rostering, merchandise and logistics. Ideally, ERP delivers a single database that contains all data for the software modules, which would include manufacturing, engineering, bills of materials, scheduling, capacity, workflow, management, quality control, cost management, manufacturing process, manufacturing projects, manufacturing flow, supply chain management, inventory, order entry, purchasing, product configurator, supply chain planning, supplier scheduling, financials, general ledger, cash management, accounts payable, accounts receivable, fixed assets, projects, costing, billing, time and expense, activity management, human resources, payroll training, time and attendance, benefits, customer relationship management, CRM, sales and marketing, commissions, service, customer, contact and call center support, data warehouse and various self-service interfaces for customers, suppliers and employees. Enterprise Resource Planning (ERP) is a term originally derived from manufacturing resource planning, that is MRP Part 2, that followed materials requirements planning MRP. MRP evolved into ERP when routines become major part of the software architecture and a company's capacity planning activity also become a part of the standard software activity. ERP systems typically handle the manufacturing, logistics, distributions, inventory, shipping, invoicing, and accounting for a company. Enterprise resource planning or ERP software can aid in the control of many business activities like sales, marketing, delivery, billing, production, inventory management, quality management, human resource management. ERPs are often incorrectly called back office systems, indicating that customers and general public are not directly involved. This is contrasted with front office systems like customer relationship management, CRM systems that deal directly with the customers, or the e-business systems such as e-commerce, e-government, e-telecom and e-finance or suppliers relationship management SRM system. ERPs are cross functional and enterprise wide. All functional departments that are involved in operations or production are integrated in one system. In addition to manufacturing, warehousing, logistic, and information technology, these would include accounting, human resources, marketing, and strategic management. ERP2 means open ERP architecture of components. The older and monolithic ERP systems become component oriented. EAS Enterprise Application Suite is a new name for formally developed ERP systems which include almost all segments of business using ordinary internet browsers as thin clients. Now, prior to the concept of ERP systems, departments within an organization would have their own computer systems. For example, the human resource HR department, the payroll PR department, and the financial department. The HR computer systems, often called HRMS or HRIS, would typically contain information on the department reporting structure and personal details of employees. The PR department would typically calculate and store paycheck information. The financial department would typically store financial transactions for the organization. Each systems would have to rely on a set of common data to communicate with each other. For the HRIS to send salary informations to the peer system, an employee number would need to be assigned to remain static between the two systems to accurately identify an employee. The financial systems was not interested in the employee level data, but only the payout made by the peer system, such as the tax payment to various authorities, payments for employee benefits to providers, and so on. This provided complications. For instance, a person could not be paid in the payroll system without an employee number. ERP software, among other things, combine the data of formally disparate application. This made the worry of keeping employee numbers in synchronizations across multiple systems disappear. It standardized and reduced the number of software specialties required within larger organizations. Now, best practices were also a benefit of implementing an ERP system. When implementing an ERP system, organizations essentially had to choose between customizing the software or modifying their business processes to the best practice functionally delivered in the vanilla version of the software. Typically, the delivery of best practices applies more usefully to a large organization and especially where there is a compliance requirement such as IFRS and Sarbanes Oxley or Basel II, or where the process is a commodity such as electronic funds transfer. This is because the procedure of capturing and reporting and legislative or commodity content can be readily codified within the ERP software and then replicated within confidence across multiple businesses who have the same business requirement. Where such a compliance or commodity requirement does not underpin the business process, it can be urged that determining and applying a best practice actually erodes and competitive advantage by homogenizing the business compared to everyone else in their industry sector. Evidence for this can be seen within EDI, where the concept of the best practice, even with decades of effort, remains elusive. A large retailer, for example, wants EDI plus some minor tweak that they perceived puts them ahead of their competition. Mid market companies adopting ERP often take the vanilla version and spend half as much as the license cost doing and customizations that deliver their competitive edge. In this way, they actively work against best practice because they perceive that the way they operate is best practice, irrespective of what anyone else is doing. So that's the end of the video, my friends. If you like my blogs, please subscribe and share my blogs. Thanks for watching my videos again. Have a good day.